Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Hormuz Fatakia. And it's a solid start to the trading week. The Sensex is ahead by close to about 400 points. The Nifty's crossed the 25,100 mark with a gain of 135 points. Banks are riding high. The Nifty banking index is up and about. Autos, PSU, the capital market index. The Nifty capital market index is supporting the strong gains that we can see. And I think barring the realty and I think the defense sector, all the other sectors are in the green. You know, the global cues are positive, and not to forget RBI's monetary policy bazooka, which came on Friday. So all that is seeing a strong start to the trading week, and it's holding up so far.
Oh, absolutely. And if real estate was one of the top movers on Friday after
I think 4.5%, so it's just a little bit of profit.
Bit of profit booking coming in from higher levels. And of course, the less said about the defense, you feel, stocks like Garden Reach and Cochin Shipyard gaining 60 to 70% in a month. Garden Reach was up 80% in a month. So of course, there's some bit of profit booking coming in at higher levels, and it's only par for the course. Cochin Shipyard is up 55% in a month, so it's down 4% in today's trading session as well. Of course, Garden Reach signed 2 more MOUs over the course of the weekend, in addition to the 3 MOUs and the 1 MOI that it had signed over the last week as well. So Cochin Shipyard and Zen Technologies, 2 defense names among the top losers on the Nifty 500 today. Data Patterns is another one among the top losers. So defense as a pocket is underperforming today. But among the gainers, though, there is no dearth of them, and it's most of the NBFCs that are dominating in today's trading session, be it the likes of Capri Global, be it the likes of 5-Star Business Finance, both of them seeing double-digit gains in today's trading session. The top gainers on the Nifty 500 in today's trading session, Capri Global is up 12 and 5-Star Business Finance is up 11 in today's trading session. So among the others include, of course, the likes of Bandhan Bank. That too, being an underperformer for years now, is also seeing a bit of a surge today, 7% higher on Bandhan Bank as well at the highest point of the day. And of course, MCX at a record high after the approval from SEBI to launch new futures. And that is showing up on the stock almost 40% higher in the last 1 month is MCX. So 6.5% higher on that stock as well, trading at a record high. But the stock that has been in focus over the last few minutes has been Tata Motors, and that is because of their investor meet that is currently underway. But the company has shared a presentation with their outlook for the next few years. Sudarshan is here to decode just that. Sudarshan.
So Tata Motors is holding Investor Day, and for Tata Motors it's today, and on June 16 JLR will hold Investor Day. And ahead of Investor Day, Tata Motors has released outlook for FY26 and beyond. So first, talking about commercial vehicle business, it's targeting market share of 40% by FY27, and current market share is 33.5%. So it's almost gain of more than 600 basis points that company is targeting in next 2 fiscal. On capex front, it's saying it will be 2 to 4% of revenue. Free cash flow is expected to be 7 to 9% of revenue. Now coming to passenger vehicle business, for FY26 growth is likely to be muted, as SIAM has attributed. SIAM has said that for FY26 industry growth is in the range of 1 to 2% versus 3 to 4% that industry had seen in FY25. Now on the backdrop of that, company is saying that competitive intensity is going to be high, and global trade uncertainties could result in continued volatility in FY26. But beyond FY26, outlook for even for passenger vehicle business is looking largely positive. Company is targeting 16% market share by FY27 and 18 to 20% in next 2 to 3 years, and that's going to be a gain of more than 300 basis points. So even for FY26, it's going to be mixed, but beyond that, the outlook is looking largely positive by Tata Motors.
Thank you very much for that. Let's move on to the other big gainer, IEX. This is on the back of SEBI's approval for launch of electricity derivatives for MCX. Vivek is now joining in. Vivek, so MCX benefits. So tell us why IEX is also rising in trade.
Well, it's the derivative gainer from the launch of electricity derivatives, if you could put it very simply. So what does IEX stand to gain, as SEBI has gone ahead and given the approval to MCX for the launch of derivative contracts, and this is in the power or in the electricity market. Now, the main thing that we need to watch out for is, number one, differentiate between what exactly IEX does and what exactly will an exchange do. So an exchange like, when you're talking about MCX or an NSE, which is where you will see the futures market and which is where you will see electricity trading happen. What IEX essentially does is IEX allows for price discovery in the spot market. So exchanges like both MCX as well as NSE will go ahead and take the price from the spot market, which is mainly provided by IEX. Now, why is IEX an outsized beneficiary of this particular launch of the electricity derivative futures? It is simply because IEX is the dominant player as far as the spot market or the short-term power market is concerned, which is why you're seeing the kind of up move in IEX. Now, to put it in financial terms or to quantify the benefit, MCX already has an approval in place or has an understanding with IEX where 10% of the total revenue earned from these revenue in terms of electricity contracts will be shared with IEX. So that is one important trigger to watch out for as far as IEX is concerned. Secondly, the next important trigger will be the launch of electricity futures on the NSE, which again IEX stands to benefit if there is a similar agreement in place. So the simple reason is, number one, IEX provides the prices in the spot market and MCX as well as NSE will trade based on these prices.
Interesting correlation there, IEX and MCX. Vivek, thanks a lot for that. MCX trading at a record high. IEX too trading with healthy gains today, almost 4.75% in today's trading session. But here's an exclusive as well. Now, insurance stocks are in focus, and Yash is here to pick up a story that no policy is expected on bank assurance. Yash, tell us what your sources are telling you.
Well, Hormaz, in April, we had reported that life insurance CEOs had presented to the DFS Secretary, M. Nagaraju, talking about how mis-selling through bank assurance has been kept really, really low. And the motive of that presentation was that no action should be, put by the government as far as restrictions on bank assurance is concerned. What we've been given to understand is that the Department of Financial Services, DFS, has acknowledged the importance of bank assurance when it comes to distribution of insurance products. To be specific, they've also acknowledged the role of banks when it comes to distributing insurance in Tier 2 and Tier 3 segments because the thinking with DFS is that people tend to, have more trust on a bank official when it comes to buying an insurance policy, largely in Tier 2 and Tier 3 areas, and hence banks will play a very important role in the whole intention of insurance for all by 2047. As a result of which, what we've been given to understand is that the Department of Financial Services has assured that there won't be any policy action when it comes to restricting bank assurance channels for distribution of insurance products. In fact, this particular intention has been put in motion as well because what we've been given to understand is that the Department of Financial Services has asked public sector banks to focus on sale of insurance products along with their core banking objective. Very recently, they had asked public sector banks to focus on core banking objective and not, sale of insurance. But that now seems to have been reversed and focus has been put back on insurance products along with core banking objective.
Thank you very much for this important story. Get into a break. On the other side, we'll discuss commodities. Manisha Gupta joins in on the other side. Welcome back. The company on our radar right now is Zensar Tech. At the start of the month, the company also held an investor conference for many analysts where they did reiterate their ambition of getting to the top of the industry growth rates in 2 to 3 years, the top quartile of industry growth rates and margins. So Vijay Simha, who is the Chief Operating Officer at Zensar Tech, is now joining in. Thank you very much for joining in. Just to dwell on the point that we were talking about, you reiterated your ambition to be in the top quartile of the industry when it comes to revenue growth and margins in the next 2 to 3 years. So what kind of growth and margins are you targeting, say by FY28, FY29, which can get you to the top quartile growth?
Yeah, so look, I think, first of all, thank you for having me on the show. Very clearly, I think what we are currently seeing in the immediate future is a certain level of uncertainty associated with the macroeconomic conditions. But this provides us with an opportunity to be part of certain large cost optimization kind of deals, help some of our clients establish GCCs in India, and more importantly, move the needle in terms of experience led everything, which is what most of our clients are looking for, right? So that will help us like basically accelerate growth. In terms of margins, we are clear that we will be in the mid-teens, and we will invest that in sharpening our capabilities and selling more to our clients. So we are not necessarily talking about, from a margin perspective, uplifting what we currently are. We want to be here, but we definitely are looking at accelerating growth over the next 2 to 3 years.
Do you think by, say, 3 years down, we could be at a sustainable double-digit kind of a growth rate?
That's the aspiration, but of course, a lot depends currently on the macroeconomic situations. When you look at it, Jan and February started off on a very positive note. We were seeing a lot of green shoots. But then subsequently, with the tariffs and all of the other geopolitical considerations, there definitely is a certain amount of uncertainty. I think we have significant headroom for growth as a company, right? And we are sharpening our capabilities in multiple areas, primarily the experience-led services and also AI-related services. And we have some very unique stuff around these two propositions. And we have coined it as lead with experience and lead with intelligence, right? And that we believe will help us differentiate the value proposition to our clients, thereby delivering them superior value. And we are glad that we are already in the top quartile of the customer satisfaction index. So that, I think, is very, very key for us to be able to like accelerate growth.
Mr. Ali Lughata, good morning. Thank you for joining in. You mentioned, sir, in your investor day that uncertainty over the last few days has increased. In what sense, if you could elaborate on that, and how has that impacted on a more company level, whether it has resulted in any form of cutback in client spending, or has it resulted in delays in deal signings? If you could elaborate more on that.
Yeah, so I think if you look at the US economy, right, I think it kind of contracted by 0.2% in Q1. As a consequence, different clients are basically reacting differently. The consumer services segment is one place where we are seeing a significant amount of caution when it comes to discretionary spend. Similarly, the tech sector, clients in the tech sector are also reducing their discretionary spend, especially given the large kind of outlays that they had for digital transformation projects in the previous years. So there is a certain amount of, I would say, caution when it comes to like spend. Having said that, we are seeing quite a bit of cost optimization, cost consolidation deals on the table, and we are going after those things. The BFSI sector has been largely stable in the last few weeks. So overall, what we are seeing is that there are certain places where it is taking longer time for the decisions to be made. But at the same time, I think like there are quite a number of good deals in the pipeline. So we are cautiously optimistic despite the immediate level of uncertainty that is there.
Cautiously optimistic based on the deals in the pipeline. We'll come to the, is there going to be a delay in converting these deals into a pipeline? If you want to just throw in a quick word on that, because of the uncertainty that you alluded to. And secondly, I wanted to get your thoughts in on Agentic AI, because you did say that generative AI will have a limited impact on enterprises as compared to Agentic AI. I think that was one of the discussion points in the investor call as well. So tell us, elaborate a little bit more on that.
Yeah, so look, I think it's a mixed bag currently in terms of deal closures. In certain geographies like Africa and Europe, we are seeing quicker deal closures. In specific places in the US, we are seeing slight amount of delay. So I think it's a mixed bag at this point of time. It's not like a one size fits all kind of a situation that we are currently in. With regards to agentic AI, I think what we are seeing is that like it's not just about Gen AI, but a combination of technologies, right? Be it AI, traditional AI, Gen AI, data, all of those things, right, coming together to deliver business value to clients. That is what the focus is on. We are seeing a fair bit of what you call openness among our clients to look at agentic AI, be it in the area of legacy modernization, be it in the area of like reducing significant amount of cost in maintenance of applications and things like that. What we are, of course, still in some of the POC phases is about micro vertical specific use cases, right? How does agentic AI play there? We have had some very cool stuff in a couple of places. We are actually looking at fine tuning some of the SLMs for industry specific use cases, and that is finding resonance with our clients. So definitely, I think agentic AI will help deliver value to businesses. Are of course cautious given the larger scheme of things around whatever spend and stuff like that.
Mr. Ariloghata, quick couple of questions. Every time a company tells us that they are cautiously optimistic, they are more cautious than they are optimistic. So are you cautious more or are you more optimistic? And the second part of my question is, with BFSI being your largest segment, it's still not the most profitable one. But in the US, the BFSI is one segment that has still done well despite all of these uncertainties. Do you see that improving?
Yeah. So look, I think I'll not give you the answer that you're looking for. We are both cautious and optimistic. And as our results have demonstrated, I think we have been growing over the last few quarters. And we are hopeful that we will continue to like basically deliver growth that both the industry as well as the shareholders like kind of are going to be happy with, right? So that is what we are. And sorry, what was the second question? I forgot.
The BFSI bits, it's still your largest business, but still not the most profitable. Does that improve in FY26?
So look, I think for us, BFSI has been fairly profitable, right? I don't think it is drastically different from the rest of the segment. And BFSI has been one of the key growth engines for Zensar over the last 2 years. And we, at this point of time, believe that it will continue to be the same for the coming future as well. We have some deep industry expertise in the BFSI space coupled with the technology capabilities. And as a consequence, we are able to like basically make this the growth engine.
Thank you very much for joining in. That's the word coming in on Zensar Tech. Get into a break. On the other side, Somil Mehta of Mirae Asset Sharekhan will join in for a technical check.
What is your leadership language?
Maybe this sounds controversial, but the classic hierarchical organization is no longer going to be relevant.
How you came back to India in 2015, the height of the Maggie crisis.
My father later on told me, when I called him up, I said, "Dad, should I take up this?" So he said, "Son, nobody puts an idiot into a crisis." Most corporations, Shireen, and you know it better than I do because you see many more people, they seldom fail because of lousy strategies. They fail because of lousy leadership.
What is one of the most underrated management principles?
I think the word happy has vanished from our dictionary.
What have been the biggest lessons from a marketing point of view that you would like to leave?
Kodak did not fail because it was a lousy brand. We did a small experiment to have Maggie counters in weddings. A Maggie stall attracted far more attention than the other traditional food fare.
In a wedding?
In a wedding.
How difficult and how different is the Gen Z customer?
They don't come in with a reverence for any brand.
Why do you say so?
Welcome back. Can't necessarily call it a cool off, but at the start of the show, the Nifty was up 130.35. Now we are up 110. So still holding on to that 25,100 mark as we speak on the index. And in some of the stock movers, though, well, MCX continues to remain at a record high, and Praj Industries has now surged to the highest point of the day, 6% higher on that stock. Just spoke about IEX earlier in the show, but some of the other names, look at Whirlpool. Whirlpool's up 5% in today's session, and it's recovering some lost ground after the management had earlier announced plans to sell further stake, bring it down to 20%. And despite that overhang, the stock has recovered from the lows of around about 800 to 900 rupees. And since then, it's seen Nuvama Wealth is another one, 5% higher on that stock as well. So that capital markets theme continues to do well for the markets, be it Nuvama Wealth, be it BSC, CDSL, a lot of these names continuing to move to new highs. But Somil Mehta from Mirae Asset Sharekhan is now joining in for a quick chart check. Somil, good morning. Thank you for joining in. Now that we are above that 25,000 mark convincingly, does the road open up for the Nifty to retest its record highs of 26,277? Maybe not this series, but the next one. And what are your stock recommendations this morning?
Absolutely. In the medium term, definitely looks good. And the all-time highs are very, very close. And the medium-term outlook, I'll definitely be expecting those highs to be retested. And in fact, even above that. But at this point of time, we should be, targeting short-term. 25,500 would be my short-term target. On the downside, we have taken support at 20 daily moving average, which is around 24,800, which was resistance for a couple of days in the last series. So I think 24,800 will be a very, very crucial support from here on. I'll be expecting positive momentum to continue, and the targets would be 25,500. For Bank Nifty as well, the range has broken on the upside. I'll be expecting the next targets to be around 57,500 levels in the very short term. The support should be around 55,500 levels. Both indices positive, buy on declines should be the strategy. My two stocks would be, the first one would be Phoenix Limited, and this stock has broken out of a small triangle pattern on the daily charts, and there is a huge consolidation on the weekly charts as well. I'll be expecting that to break out on the upside as well. So short-term, medium-term positive for Phoenix Limited. Stop loss would be 1570, and short-term target would be 1800. The second one would be KEI Industries. A breakout from a flag pattern, a bullish flag pattern, momentum indicators, fresh buy signal, great momentum. Stop loss would be 3650 and targets would be 4100.
Got that. KEI Industry and Phoenix Mills. Phoenix Mills hasn't done too much. I think this year stock is flat. In the last 1 year as well, I think the stock has only given a return of, today of course it's doing well, 2% up. But I think even in the last 1 year, the stock is just up close to about 1% 3-year return has actually been quite exceptional if you can pull that up, where the stock has gone up close to about 180, 190%. Thank you very much, Somil, for those trading ideas. Get into a break. On the other side, we'll discuss market fundamentals. Seshadri Sen from MK Global joins in.
I'm why people leave home and return changed. I connect cultures and preserve heritage. I'm more than leisure. I power economies and innovation. But I need to do more. I call on global leaders to act with me, to rethink how we travel and carefully before investing.
Welcome back. Let's talk about the markets, fueled by Positive global cues, the employment data, US-China trade talks, the RBI bazooka from last week. Markets are holding up its strength. We've got a gain of close to about 0.5%, and the Nifty comfortably above 25,100. In fact, since the lows in the month of April, when the tariff uncertainty was at its peak, we've seen the markets rally more than about 10%. Seshadri Sen from MK Global is now with us to talk about the market fundamentals. We've seen the markets rally quite a bit, and now sentiment is further fueled by the RBI bazooka. The question is, what from here? What's the setup looking like for the markets from your point of view?
Hi, thanks for hosting me. So we remain constructive on the market, though the rally from the bottom of 10% has taken a little bit of the upside away. And our Nifty target for March next year is 26,000. So there's limited upside from here. However, the broad momentum remains positive. Our view is that coming into the second half, you will see a growth recovery coming into India, mainly led by consumption and discretionary consumption. One interesting aside from the RBI comments here on Friday is that rural consumption is strong, and we saw that in some of the value retailers where the top line growth has been fairly strong. On top of that, we see discretionary consumption coming back as most of the RBI cuts will be passed on to retail rather than wholesale consumers, wholesale borrowers, and that in turn will translate into strong demand for consumer discretionary items. So we remain constructive on both the growth dynamics of the economy and the overall market as we go further into FY26. The only caveat is that valuations are not as comfortable as it was a couple of months ago, but that again is cause for a little bit of caution, but not negativity.
Seshadri, good morning. Thank you for joining in. A bit of an anti-consensus view on financials. You've mentioned that you are recommending that any sentiment-driven rally in banks should be sold into. But a general consensus on the street is that if there is a pocket of value right now among large caps, it is in private financials. So take us through your rationale here.
Yes, I've had this anti-consensus view for a while. The large banks, the two issues with the large banks at this stage. One is the market is underestimating the impact on margins, especially upfront, that will come. 100 basis points in a short period of time is a large cut, and with fairly decent exposure to EBLR loans for most of the large banks, what you will see is first a pretty strong margin compression. Some of that will be recovered in the second half of FY26, but you'll still end up in a scenario where FY27 margins, which takes the full year impact of all the changes that have happened, are still lower than FY25, because in a falling rate scenario, only some part of the bank's liability franchises reprice, while the entire asset side goes in for a very aggressive repricing. That is the short-term view. The long-term view is that banks are now the large banks are now stuck in a low growth orbit, and the 2 odd times price to book valuations do not yet reflect that lower growth orbit that they are in. We would be more comfortable when they are in the 1.5 to 1.7 times price to book zone.
Got that. That's the anti-consensus call. So as you said, right, your target on the Nifty is 26,000 by March end, which means limited upside from here on. So if you have to make money, where should you park your money? You've spoken about consumer discretionary and how the signs are that things will recover in H2. So I guess that's something that you like. What else?
We like real estate, cement, materials and cement, though, and we still like technology. Those are the sectors that we still continue to like. As far as sectors are concerned, we do expect some upside to earnings in FY26. The market's still reeling from massive cuts in FY25 earnings, and consensus has taken their forecast down to the bone. The benefits of the lower RBI rates on consumption and the benefits of lower commodity rates on margins are still to be captured in consensus estimates. So as we get into second half, we will see some earnings upgrades selectively in certain sectors. So that the way to structure portfolios is try and follow those earnings upgrades again, consumer discretionary is one sector which will deliver those.
So you said real estate, cement, tech, consumer discretionary. Am I missing anything?
No, that's
These are the four sectors that you like.
That's it.
Got that.
Indeed. Now, that's again, I'll dwell upon cement a bit, Shishadri, because that is also coming across as an anti-consensus call, right? After a very tough FY25 that the entire sector had, we are still undergoing a period of consolidation. It's still now entering a seasonally weak period as well because of the monsoons. Will the second half deliver enough for shareholders that this entire period is taken care of? Do you expect that recovery to happen in the second half of FY26?
We've seen, you're right, we've seen not just FY25, a 2-3 year period when the larger players have held cement prices. And there's been a consolidation in the sector. And as a result, cement prices have not gone up. In FY26 and 27, you will see that changing. Demand will continue to grow, and the larger players will now start to take some selective price hikes in across the country. And because they are now looking, they've now made a lot of acquisitions. They will want to take those acquired assets up to higher profitability, and price hikes is a good way of doing that. So, I've been tracking cements in the 90s. The thumb rule is if cement prices go up, so do the stocks. We believe cement prices, the outlook for cement prices look positive in second half of FY26, and stocks will start discounting that a couple of months or 2-3 months before that.
Thank you very much, Shishadri, for joining in. Great conversation, and look forward to the next one already. Get into a break on that note. On the other side is our
Welcome back. Now, from supply chain disruptions to geopolitical tensions, the business landscape has become inherently unpredictable. My colleague Vamakshi Dhorias recently sat down with Brandon Spencer, the president of ABB's motion business area and member of the group executive committee, to discuss how the company is navigating these challenging times. Listen to a slice of that conversation.
Overall, ABB is navigating the challenges well. We're very diverse in terms of geography, and we're very diverse in terms of industry. So we really don't have any industry that represents more than, say, 15% of our overall revenues. And so that allows us to kind of ride the waves a little bit smoother than some of our competition. We also have a very local for local strategy, and so I'm sure we'll talk more about that while I'm here visiting with you today. But kind of those things combined, along with being a technology leader, have really allowed for us to navigate well so far.
Well, absolutely. And are there any particular segments wherein, customers are sort of hesitant to place orders? Are there any sort of delays in terms of investment decision makings or, project timelines? Are you facing any sort of challenges in some segments, if you can highlight that?
Sure, we see some of that. I mean, it's not too atypical, I would say, in the large project business. A lot of our heavy industry clients, whether it's mining, whether it's marine, oil and gas, et cetera, they go through these periods and they have final investment decisions that they take. And that depends on a lot of things that are going on in the macroeconomic environment as well as the geopolitical environment. And so we do see some delay in some things with a little uncertainty with tariffs and some of the trade things that are happening. But we also have really robust pipelines, I would say. So I think there may be a few things in large orders that are a matter of timing, but overall we feel pretty secure in what the pipelines look like, and that ultimately these projects will go because really the society needs for them to go forward with more energy consumption, more overall consumption. And so obviously we're serving some of those industries that support that.
You mentioned about tariffs, and I have to ask you about the US market because it is quite significant for you. Now with President Trump's big, beautiful tax bill, which could potentially reduce or eliminate clean energy tax credits. Of course, we do have the threat of the reciprocal tariffs playing out as well. How are you realigning your strategies for the US market then?
No, I mean, I think our strategy has stayed consistent and really will stay consistent. We have a local for local strategy, which I mentioned earlier. So if you look at the U.S., 75, 80% plus of what we sell in the U.S., we make in the U.S., especially if you include Canada and Mexico. Those percentages are even a little higher. India, 85% plus of what we make in India or sell in India, we make in India. Europe, 90% plus. China, 90% plus. And so for us, we're very heavily invested in the markets that we serve, the customers that we serve, and being local for local. And so the tariffs create uncertainty. We believe in open markets and free trade, certainly. But the long run, I think, we still see that a lot of these projects and customers will move forward with some of the spend.
Well, does the big, beautiful tax bill then pose any sort of threat to you because of the clean energy tax credits then?
Yeah, again, if you go back to our diversity that we have across industries, we support renewables. We have some big customers that are executing geothermal projects, for example, in the U.S. that are continuing to make that investment and go forward. Our oil and gas business, LNG, is a big export business for the U.S., and we see some of those projects going forward. So because of the diversity of our business, again, I think we can kind of ride through the cycle and then make sure that we're focused on providing the best technology, local resources, local execution in order for them to execute whichever type of energy value stream goes forward.
Absolutely. So you're saying you're largely shielded from these sort of uncertainties that play out. But, I'd also like to ask you about the European side of the market, because right now there have been a couple of changes. Of course, there's higher defense spending, but there's also increased focus on energy efficiency as well as investments in some other utilities then. So what does this spell out for you, especially in the European market?
In the European market?
Yes.
Yeah, I mean, the European market's been down a little bit, certainly tough, but it's also very regional. Northern Europe for us has been strong. We've seen a lot of investment in Northern Europe and the business going well. There are some slowdowns in places like Germany and other countries which have dependency on other parts of the world for export. But overall, we've seen it stabilize, I would say, a bit across the last, say, 6 months or so. And so hopefully we continue to see those patterns develop for us in Europe. Obviously, that's the home of ABB and large employee base and manufacturing base. And so, we certainly hope to see that bounce back up here a little bit in the time to come.
So we've spoken about demand in the US market, we've spoken about demand in the European market, but there is one sort of supply side concern that is now creeping up, and that is actually from China, because you must have heard about this. There have been curbs on the rare earth elements that have come from China. So is that a critical element for you, especially in some of these high energy efficient motors like IE4, IE5? Does that sort of put a strain on your production lines?
No, it has not really. I mean, we focus on the metals like copper, aluminum, steel, these kind of things. And so there is a global supply chain of that's not completely dependent on one country like China, for example. We've also innovated in our technology. So we have a synchronous reluctance motor, which gets away from rare earth metals in order to still drive high efficiency. And so it's kind of a combination of other metals that we're focused on and then innovation that we have in our products to make sure that we don't have to consume those.
I'd also like to understand something about your robotics division, because in the board meeting that had happened very recently, you all have decided to spin it off and list it as a separately listed company. So could you help us understand what is the kind of rationale that goes behind this decision?
Yeah, our robotics business is one of the strongest robotics business in the world. It gets combined and consolidated with the rest of ABB. So it gets compared to businesses that aren't as similar to that business. And so we think if it's standing alone, that business will be very attractive to capital because of the returns that they provide, the market leadership position that they have. And so we believe the access to capital to be compared fairly against other motor competitors and really shine is an opportunity for the robotics business. We've loved having that business in ABB, and we'll see when that time comes and what it looks like. But I think for the robotics business, it's a real positive and viewed that way. There's also not a lot of synergies with the rest of ABB. So they are fairly standalone in terms of how they operate, what equipment they use, those sort of things. And so I think it's kind of a case of even better if you look at turbocharging, which was in ABB, and we spun that out. That's done very well on the open market for their shareholders, for that company. And so sometimes it's just the right decision to make.
But an interesting, well-rounded conversation on ABB. For the Nifty, holding on to 25,100, But some stocks like Bajaj Finance and Finserv are seeing a bit of profit booking. Holding smart, so Bajaj Finance is still up 2.5%, but there has been a bit of a come-off in these names. Realty, on the other hand, has nudged its way back into the green. It was one of the few sectors where you had a red tick, but now it's back in the green. And in the mid-cap end of trade, as we highlighted, Hormus was talking, it's the PSU banks, it's the NBFCs which are ruling the markets on the way up. Bandhan Bank, Edelweiss Financial, IREDA, RBL Bank, JM Financial, Bank of India, Bank of Maharashtra, Manappuram Finance, across the board, big, solid gains of about 3 to 5% coming through. Steady so far, the last hour and the day, the morning. That brings us to a close on Trading Hour. Thank you very much for watching.